What's good, YouTube? Today I'm going to take you on a step-by-step process on how I was able to cash this trade on USD JPY using the top-down analysis. And I know this is a common word which you've been hearing over and over again. I'm going to take you on a step-by-step journey on how you can replicate the same results whenever you see these same opportunities in the market. So stick around, and at the end of this video I'm going to reveal to you something about top-down analysis that can completely change the game for you. So with no further ado, let us dive right in.
What's good, traders? Welcome back to the channel. This is your boy PhilFX, and I'm super excited to have you here. So as we earlier said, today we are going to be drilling on USD JPY, and I'm going to show how I was able to catch that trade. Not only that, but revealing how we do our top-down analysis. So with no further waste of time, let us kickstart. Now we are on the higher time frame, the monthly time frame. So we usually start our top down analysis from the higher time frame, and that's even one of the reasons why it is called the top down analysis, because you start from the higher time frame to the lowest time frame possible, and every time frame has things you have to figure out before you move to the next time frame. So on our point here, we are going to start from the monthly time frame. And on the monthly time frame, the first thing we have to mark out is our key levels. Now let us look out for the key levels we can see clearly on the charts. This is one here, and then this is another one up here. This is another key level here. Now, why do we call this level key levels? This is simply because market came to this level down here and acted as a support zone. This level down here at this point acted as a support zone. Let us illustrate so that it should be very clear enough. Market came here, broke above this level, came here, retest back, and this acted as a support level that pushed the market up to this level up here. And now this level pushed back the market back to the support level here, and the support level pushed back the market back to this almost at this resistance, and then this market came back to this level here, and this level pushed back the market up to this level. That is to see that market has been ranging between these two key levels. That's why we call them key levels. So at any given point in time, in as much as we know that USD JPY is trending upward, if market gets to break above these key levels up here, above this resistance, the market will keep heading higher. But if for any reason it reverses and breaks below these key levels down, which is the support, it will keep going lower. But within this range now, because this is the monthly time frame, there's still a lot of opportunities we can have within this range. Now let us spot out the first one. Now, still looking within this range, we can see a fair value gap and an order block that market has not yet mitigated. Now, take a look at this. Take a look at this down here. This is an order block down here and a fair value gap that market has not yet mitigated. And that means it gives us a clear confirmation that market most likely will come back to this area. Market may likely come back to this area to mitigate this fair value gap. So this already gives us a point at the back of our mind that, okay, there's a possibility that market most likely will come back to this area. So we marked out just at the level of the fair value gap because we are on the monthly time frame. Now let us go down to the weekly time frame and see what's happening. Now on the weekly time frame, that is where things becomes even more and more interesting. Now look at this. Market left this key level up here. I think you can see it very clearly. Let's readjust it. Yeah, this is the key level. Market left this key level up here and it was pushing down aggressively. This was pushing down so aggressively, and you can see the formation of the bearish engulfing candlestick. This is it here. The formation of this bearish engulfing candlestick, and market came and rejected at this demand zone down here. Now let us mark it out so that you can see very clearly that things do not happen here by mistake. They happen here based on reasons. Now look at this order block down here connected to this fair value gap. Market came and snapped into this fair value gap and order block and started pushing back upward. And remember, when market was giving these aggressive sales down here, this aggressive sell, it equally left behind a fair value gap and an order block. You remember that one to the upside now is a demand zone. So let us equally mark it out. That means as market is heading upward, when it comes to this point, most definitely there will be a reaction. Are we following? Nice. So when it gets to that level, there most definitely gonna be a reaction because it already reacted off this demand zone here and it's heading upward. So now our next target will be this zone here for this fair value gap to be mitigated. Now that is our next target, even before the one up. So now we confirm that we are still buying, we are still bullish on the USD JPY based on what we see here. So now with no further waste of time, we go now to the daily time frame. Now we can see that when market was pushing down this level so aggressively, it left a lot of imbalance that was not filled. Look at it from this level here down to where it went to this level here, it left a whole imbalance here that have not been filled, and market is actually rejecting off from this demand zone here to fill this imbalance. So now chances are high that market can come here, mitigate this imbalance and fall back, or it can still come and break above this our recent resistance zone and continue heading to the upside. But because of this rejection here, we are confident to an extent that market most likely will get to this resistance point within the zone here. So now that is our next target. We are looking for markets to get into that zone. So we are looking for possibilities to have a buy setup from here up to that demand zone there. So now I think that should be what we are looking forward to under the 1 hour. So we dive more deeper now to a lower time frame. Now this is the 4 hours, and this is where I was able to get my confirmation. Look at this very clearly. Now you can see on the chart that we can mark out another key level here. This one. This is a strong key level here. Now look at this very clearly. Market came rejected from this demand zone here and went back up to this key level and failed to break above. Oh, let us use an illustration so that it should be very clear to everybody. Take a look at this. With the use of the path, market came here, rejected back up to this zone, push, and this zone pushed the market back into this level, and the market came back all the way and went back with this strong rejection and came back. So market actually faced a very strong resistance level at this point to break above. And now remember the law of break and retest. Whenever market fails to break above a level for a significant period of time for at least three times consecutively, that means whenever market finally breaks above that level, there most likely be a retest and a continuous buy from that level. I think this is very clear. So this was a point where market faced a lot of resistance to break through, and now already at the back of our mind we knew that at any given point in time, if market happens to break above this resistance level, market is definitely going to give a retest and a continuous buy to the upside. So that was what I spot on the chart before it gave me that the trade I saw. Now let us dive to the lower time frame, because on a higher time frame you won't be able to see the retest clearly. And now let us look at the 1 hour time frame. There you can see the zone very clearly. You can see the zone very clearly. This was the zone here, and you can see that market came to this zone for a long period of time and failed to break above that zone. And whenever market finally broke above this zone, which is at this level up here, it gave a retest. Now on a hourly time frame, you won't be able to see the retest because it was a weak rejection on the lower time frame, and that was when market spiked all the way to the upside. And now there's another setup that I'm going to reveal to you here. There's still high chances that market is going to reverse from this point down here to fill all these imbalances here and tap into this other block and push all the way up. Now this is what I'm talking about here. There are chances to have another setup here. As market got to this point, there's a possibility for market to return back here and then push back to the upside. Why? Because we have an unmitigated fair value gap here, which is this one, starting from this point here up to this level, and this is the other block here. So this is the candlestick that caused this break of structure to the upside or the higher time frame. So there's a possibility for market to come back here, and we look forward to have even more long positions at this level. So this will be a typical setup. You know, applying proper risk management is always advisable, and this is our target up here. So you have to watch out for this setup. Watch out for this setup. Watch out for this setup. Now, this is another second setup that we are looking forward to. Going in for a 1 to 3 risk to reward ratio is always recommended. Now, let us dive to a lower time frame so I can show you the setup that I was able to spot. Now, we will look at the 15 minutes time frame. Now you can see it very clearly, I mean very clearly. Now this was the level where market broke above this level. I think you can see cleanly. Yeah, this is it here. Let us demonstrate. Let us demonstrate. I like the way it's clear. Now you see this was the resistance point. The market faced a lot of difficulties to break above, and when it finally broke above with this candlestick here, you see the long rejection up there. It came back with this weak rejection here to give us a retest. And what happened? Boom, it went up almost immediately. Almost immediately after that retest. Almost immediately. So at this point now, we're only looking forward to take our buy setup from the retest. And this was the retest point here. This was the point of retest. And now, pam, that was the market. Our stop loss was just relatively below this last week rejection here, and then we are going to always go in for a risk reward of 1:3. So in as much as the market has not quite hit our take profit, but we cannot keep holding. At least it has given us a good profit. It's giving us some good profits here, so we can decide to close out. So that was the trade here. That was the trade. As simple as that. As simple as that. Just a break and a retest back to this zone, and the market shot all the way up. I think that's very clear. And now, following the setup we are looking forward to on a higher on the now this is the 30 minutes time frame, and you can see it. After this break, we saw a retest, and boom, the market went up all the way. And that was because this zone now was the market finally broke above this zone. So that is, whenever you see this kind of setup in the market, don't hesitate. Spot out a strong resistance level that market has faced difficulties to break above for a significant period of time. And whenever market convincingly break above that level, always wait for a pullback, and you hit your sell button, your buy button if it's in the bullish market, and if it's in the bearish market, what are you waiting for? You hit your sell button. So this was the trade, and now I promise to give you a bonus point. I promise to give you a bonus point. Now, many people trade support and resistance only based on, okay, now market broke above this level. Let's cancel this. I think we already saw the setup. So now the notion of many people is that whenever market breaks above a significant resistance level, they only look for a pullback, and they are going to jump in for a buy. Now, what is the confirmation that you saw before you enter for a buy? Now, this is the point I'm bringing clearly. Now, the next confirmation we had here was the order block that is connected to the fair value gap. Let me take our rectangles two. This is it here. This was the order block that was connected to this fair value gap that caused the breakout. And so whenever market came back to that order block, that was where we are waiting to take a trade. Now we had a double confirmation. That's the thing now. Just waiting for a break and a retest is a confirmation on its own. But looking forward to a place where we have a fair value gap that is connected to an order block, which we call it a demand zone. It's a double confirmation, and whenever you combine these two confirmations together, most likely, I think even up to 70%, it will give you accurate signals. So this is it, and I believe this was able to help you see something new. And
okay, just a quick reminder, this is not a financial advice. Whatever you see on this channel is for educational purposes. Thank you so much for watching up to this very end. I hope to see you in the next video. Please don't forget to like and don't forget to subscribe to the channel. This is your boy PhilFX, and signing out.